So our next speaker is National Life. Rich Donato is the new general agent of the New York and Long Island offices of National Life. And Wealthbridge is the name of his firm. National Life has a terrific portfolio, and Rich is a terrific partner in letting you know about the National Life products and moving forward. So I'm going to let you take the mic.
Yeah, thanks, Neil. Thanks, everyone. Hey, Neil, my partner on the product side should be hopping on anytime, Steve Wallach. So just be on the lookout for that.
No worries.
Good morning, everyone. Yeah, it's great to be here. Obviously, Neil's put on a great day for all of you. We're appreciative of the time we get. I think we've got a great story to tell that does make it, unique to us, at least in my opinion. I've been in business for 23 years, mostly with what we call the legacy large carriers, they've done a nice job of navigating the challenges that this industry's thrown at us. And so the reason why I start with that is because when I joined National Life as a general agent, I thought that our story went beyond certainly just product. And I always tell everyone that a big part of it is my own personal story. So hopefully this grabs your attention. My father had a stroke 6 or 7 years ago. It's going to be 7 years ago. And I, as a good agent and a good son, I had him own many of the good companies. Unfortunately, and I'll leave those company names out of it, unfortunately, none of those companies helped in that situation where he had a stroke. Unfortunately, he's now in a wheelchair, left side of his body paralyzed, never the same. And when I learned about the National Life Living benefits, it really changed the way I looked at insurance. And, I've been doing this 23, 24 years. I'm a financial planner by trade, but it really had me thinking, how do we look at life insurance planning? Not only by delivering on great products, because we've got to do that, those are table stakes, but how do we tell the entire well-rounded story of what our products at National Life can do for our clients, both, in the unfortunate event of a death, but more importantly, what Steve, my partner, is going to talk about is the story of the products and the compounding impact of what I believe is our fiduciary responsibility to provide them with these important living benefits. So to all of you out there who are great advisors, great agents, I hope that story resonates with you, because when I take a look at from time to time and I see a GoFundMe page, many times the unfortunate part is that client, I see many of them die without life insurance, and it always kind of like hits me that, oh my God, I can't believe that. But many of them do survive, and they're impacted by something that is covered in our living benefit story. So with that, I'm going to turn it over to my partner, Steve, and he's going to tell you a little bit more about this. So Steve, over to you.
Thank you, Rich. And Rich, I believe that is the second time that I heard that story. And again, I'm sorry that you went through that. I went through well, before I start, first of all, I would like to thank all of you. Neil, thank you so much for the invite to this meeting. And I want to thank everyone for your time and for listening to Rich and I this morning. I also have a personal story as well. My father, unfortunately, passed away this year in May, and it was indirectly caused by COVID. He became severely depressed, 87 years old, became severely depressed, and he stopped eating, and he needed to have care for his last 2-3 months. He needed full-time care, pretty much full-time care, and it was costing him and his wife on an annual basis. It was between $75,000 to $80,000 for the year. So if you actually took the weekly cost and spread out over a an annual period. It's about $80,000. And my father didn't have any protection, no long-term care, no chronic illness, no protection. And he didn't really have a, he didn't really have many assets. So the money would have been spent through pretty quickly. And so going through that experience made me realize, like what Rich is saying, how important it is to have full coverage, not only for chronic illness related situations, but also critical illness. And I'm going to share some of the triggers that you can protect your clients from and provide them financial benefits so that they can get the care they need and recover. So I'm going to share my screen and go through a presentation. And if you have any questions, please feel free to put it in the chat and I can review that. Or if you have a verbal question you'd like to ask, you can definitely unmute as well. So let me go ahead and share. And Neil, just to make sure that I'm right on time, we're on till 10:30, correct?
We're good. Yep.
Awesome. Okay. Can you see my screen?
Yep. Terrific.
Awesome. So thank you, everyone. My name is Steve Wallach, Key Account Associate with National Life Group, partnering with Rich Donato. I'm essentially the person that you can connect with if you like help with illustration support, product support, questions on our features and benefits. Here's my email address and my phone number, my direct phone number. So anything I can help you out with selling our solutions to your prospective clients, I'm the person you can reach out to for that product and illustration support. All right, so let's get into it. Let's get into the content. So following Rich's story, I think it's so important to realize how both term and permanent insurance vehicles that you have access to offer to prospective clients, to present to clients, has transformed completely from 10, 15 years ago. And National Life Group has been leading that charge. We have been the fastest growing, National Life Group has been the fastest growing insurance company looking at LIMRA statistics. We have been the fastest growing insurance company. And I've seen so much growth since I joined in 2012. So about 10 years, almost 10 years, I've seen that growth with different areas of the company. I've seen growth in distribution. And the main reason why I think that growth has been very successful is really comes down to one reason: life insurance with living benefits, benefits that you can use while you're alive. And here we've taken the traditional definition of insurance, the protecting against premature death, making sure that families are taken care of, the mortgage is taken care of, the children can go to college, can get educated. But we've completely transformed that to being able to provide protection against serious illnesses, whether it's chronic illness, critical illness, but also providing solutions for longevity as well. Longevity risk is real. You know, I was in Florida this year and I met a woman who's 102 years old and she was learning how to play chess with her grandson. 102, great shape. So longevity risk is real. And we also provide solutions to help with income, tax-free income on one of our insurance vehicles. So what you see here is one package solution that can address 3 financial concerns that our clients may have throughout their lives. So I'm going to go through our product portfolio and tie this back into it, but this is our puzzle piece. It's life insurance you don't have to die to use. It's insurance you can use while you're living. So before I get into the flagship products, I would like to start with our living benefit story. So these are our accelerated benefit riders, and we do have most of them available. There are some state differences. So in the state of New York, we offer protection against terminal illness, chronic illness, and critical illness. And then outside of New York, we also have the additional critical injury riders. So in New York, just terminal, chronic, and critical. And then outside of New York, we do also have the critical injury rider. These benefits are included in all of our products, including term. So in New York, for example, on term and permanent, we have three, the terminal, chronic, and critical illness riders. And we've had claims both on term and permanent that we've paid. Last year in 2020, we paid roughly $59 million in living benefit claims. $59 million, right? Think about how many families that helped out when they needed it, when they needed the help the most financially. So they're available on all the so term and permanent, and also they're discounted benefits. So there's no charge to have these riders on the policies, no extra premium, and they're tax-free benefits to the client. And the best part, I feel, now there is a state exception, for example, in Massachusetts for chronic illness, but in most cases, the money can be used for any purpose. It's indemnity. The client submits a claim, receives the money, and they can use it to renovate their home. They can use it to get care from their children. It doesn't really matter how they use the money. It can be medical or non-medical purposes. So with terminal illness, in New York, for example, any illness expected to result in death within 12 months, sometimes outside it's 24 months. But the main point on terminal illness is it's paid as a lump sum, and the maximum payout is 1.5 million, which, for terminal, it's not as, the terminal is rare or more rare than the other triggers, but 1.5 million max payout is a generous limit compared to other companies that offer that rider. For chronic illness, the simple definition, unable to perform 2 of 6 activities of daily living or cognitive impairment. And we actually did pay a claim on chronic illness, and it was as a result of COVID. So we don't have COVID as a trigger, but what happened was the lady was diagnosed with COVID and had a very severe reaction. And COVID actually resulted in her having the inability to perform at least 2 of these 6 ADLs. And she had to go through therapy and learn how to do the activities again. And she was a policyholder of us, submitted the claim, and we paid it. So, we don't see that often, of course, with a severe reaction to COVID, but it can happen. And it's it could be as simple as a car accident. Now, there are some state differences, and I'll explain that in the next slide. But typically, the waiting period for chronic illness is 30 days. And the maximum lifetime benefit outside of New York will be $1.5 million, which again is a very generous limit for this chronic illness type rider. So 1.5 million is the maximum limit outside of New York. In New York, the maximum limit is 2 million. So that's actually, right, that's a better limit, better max payout, which is great. So, and there's no waiting period. So no waiting period, $2 million maximum payout. The only condition, the only requirement in New York is that the chronic illness must be a permanent condition, whereas outside of New York, in most states, it can be temporary as long as they qualify for the 90-day inability by the physician. But in New York, it's a permanent condition. But the 2 million max payout is great for our products. And again, it's available on both term and permanent. One other thing I wanted to talk about or mention is that these, for example, the chronic illness payout projected payout is illustrated on the illustration. So for both term and permanent, so you can take a look at what a projected benefit looks like in the future. And the presentation pages are very well promoted or well presented. So that's definitely a big benefit of ours, that we know sometimes companies do not have a great sales presentation on the living benefits on their reports. I'm just going to take a quick pause there. Any questions so far?
No, we're good. Thanks, Steve.
So the next rider that we have with the accelerated benefit riders is our critical illness rider. And Rich, with his story earlier on the meeting, he talked about his personal story with his father suffering from a stroke. And so that ties into the critical illness protection that we offer on our products. And so these are, in New York, these are the 6 triggers: ALS, cancer, kidney failure, heart attack, major organ transplant, and stroke. And we actually had, so we have had numerous claims with critical illness. Some of them that I know of were in New York, others in different places. But I'll share just a few quick stories. So we have a YouTube channel. So if you go to youtube.com and you type in National Life Group, we will be the first link there. You can take a look at our channel. And we do have client testimonials posted on there that you can share with people. They are consumer approved. And there's one story about a young mother named Jessica. And Jessica was a policyholder with us. She was diagnosed with breast cancer, 2 little boys, very scared. And she tells her story, and she was able to accelerate her death benefit and receive the living benefits. And she was able to use that money to pay for treatments and make sure that if she couldn't work, that money was taken care of. And so it was just an incredible story, and a great way that we were able to touch Jessica's family's lives and help them out when they needed it the most, let alone the emotional distress. There's also a story about a gentleman by the name of Eric, and he had a rare blood disease called POEMS, and I haven't heard of it. And he basically he couldn't walk. He needs to learn how to walk again. He was, he was limping for a while and then needed to use a wheelchair, and he needed a transplant. So he was able to accelerate the critical illness rider, and he tells his story about how that saved him to get that care and be able to take care of that transplant that he needed, which I mean, you don't even think about that. I've never heard of POEMS. It's rare, but he was a policyholder with us, and National Life was able to help him and his family. And it's interesting. I'll share a quote on the video. Definitely check it out. It's great. Great story. I mean, it's very upsetting, of course, but it was just amazing how that they told everyone how National Life helped to save them. And one quote, he said, "That's why everyone needs a life insurance policy." And then his wife added, "a good life insurance policy," because you have to have a policy that covers many of these different benefits just in case something happens to a loved one or a family member. And the last story I'll share with critical illness, it actually took place in New York, and it was a gentleman purchased a term policy 8 months after buying the term policy. 8 months, found out he was diagnosed with prostate cancer. And he called his agent and said, "I just found out I was diagnosed with cancer. I may need to make changes to my life insurance, my premium payments. I need money for care." The agent said, "Well, wait a minute, let me look into this." And fast forward the story, So the client forgot about these living benefits 8 months after buying the policy, right? Which is why it's very important when you sell one of these policies to review every year and remind people about these living benefits. And if something happens, you know, we can do something, we can get money in your hands. So the agent said, well, wait a minute. And we were able to deposit the maximum on critical illness of 1 million. He bought the client bought a $3 million term. We were able to pay the $1 million maximum, deposited directly into his account. And he was able to use the money for treatments. He used the money to help with college education costs. Again, you can use the money for many different purposes. Use the money for college education, use the money for cancer treatments. And he also used the money for premium payments on a term conversion. He didn't use all the term. He had 3 million of the term. So he did have term left over after collecting the $1 million, and he converted the term and used the money also to pay premium payments on a permanent policy and grow cash value. So having these on term, on the permanent, every client that you're working with should have living benefits on both, especially if you're combining the vehicles for people. So really just, you know, definitely check out those videos though on YouTube. They're really, the stories will make you tear up. I'm going to be honest with you. And the way that we pay out on the critical illness is we pay out based on severity level. So essentially, the more severe the illness is, the bigger the payout will be. So life-threatening, severe. An example of that would be an illness that significantly impacts life expectancy, or another way to say it, impacts insurability. So if the illness results in someone being uninsurable for the rest of their life, or you know, their life expectancy is significantly reduced, then that will be a life-threatening or severe severity level, and that's determined by medical professionals we have working with the company. And then outside of New York, if you are doing business outside of New York for any cases, we do have more triggers available. So we have, including critical injury, we have 17 triggers that you can see here. Critical injury protects against coma, paralysis, severe burns, and traumatic brain injuries. So we do have producers out in the field, you know, presenting to many different markets, but for critical injury, first responders is a interesting market that they're presenting to, specifically severe burns, for firefighters, and also some of the other triggers. But outside of New York, we do have these extended triggers as well. And again, the maximum limit on either critical injury or critical illness, the maximum limit is $1 million. Any questions on the accelerated benefit rider story?
Steve, I think it's an excellent story, particularly on term. It's unique in New York. And you have 10, 20, and 30-year term in New York. And the convertibility features, I think, are very important, because part of this meeting is to say, hey, here's the unique product offering in New York and what we can do. Outside New York, we're going to have another meeting, but generally, National Life is doing a great job being very present and being very active in helping us with great product for the state of New York. And having these riders on term and permanent and converting it to have them for the rest of your life, I think is critical and terrific planning, and gives you a unique product offering.
Thank you, Neil. Thank you.
Yep.
Okay, so and Neil, you did mention that this meeting is specifically New York, so not the people on the line aren't selling.
No, we want to let everybody know what's available, but you know, basically the premise of the meeting is we've gone through a lot of changes in the market and continue to go through. And we really want to highlight and feature the companies that are committed to growing the New York market. So
Perfect.
that's very important.
And we definitely are. We definitely
Oh.
are, because we have, I mean, we do have a huge amount of opportunity, and there's been great, there's been definitely been some great cases in New York, and great opportunities there. So I'll get into the main flagship products now for the next 30 minutes. So our on our Index Universal Life platform, or IUL for short, on our IUL platform, we have two products. So we have Flex Life and Peak Life. Flex Life has a minimum face amount of 50,000, and the sweet spot for Flex Life is going to be from 50,000 to $1 million. The Peak Life has a minimum face of 1 million, and that Peak Life is going to be a better product for the advanced markets and for maximum funding when the client is purchasing $1 million or more of life insurance coverage. So that's really the difference between the two. Peak Life has a little more enhanced pricing, but the minimum face is $1 million. And these products can be used in many different sales situations that we like to work on together. So we have a great advanced markets team that can help you out with some of the more advanced concepts, whether it's with business owners or individuals. For example, premium financing has been a really hot sales concept, or sales idea, and we've been we work with different vendors, and also we have a traditional premium finance platform as well. And I learned the other day that our retention rate for premium finance is 97% over the last 10 years, which means that over the last 10 years, all premium finance policies we've issued, 97% of them are on the books. That's really high. So we've seen some really good success there. But any other sales concepts that you like working with, whether it's qualified plans, buy, sell, executive benefits, the cash value the maximum cash value potential on our product works really well. And whether you're working with middle market, affluent market, or ultra net worth, the tax-free retirement strategy is a strategy that we really like to emphasize and focus on. I mentioned earlier about the longevity risk. I'm going to tie that in a few minutes. I'm going to tie that back into here with the protecting against longevity risk and also tax-free income. And I'll explain what I mean in just a minute. So in New York, the index strategy on the IULs that we have, the index strategy, or the index is the S&P 500. So we have a few different S&P 500 strategies in New York. We do not have Credit Suisse in New York, but on the S&P point-to-point cap focus, our cap rate is 8.5%, and it's annual point-to-point. Outside of New York, we do have an additional strategy with Credit Suisse, and Credit Suisse is an uncapped strategy with 130% participation. So that has a lot of really good potential. But again, the product illustrates really well, even in New York with the S&P. But where I think the IUL shines the most is the features and benefits that we have on the vehicle with the living benefit story you just heard, but one other feature that we're going to talk about, and that's tax-free income. Now, excuse me just a minute. My fall allergies are getting in the way here. So there are different ways to take to show income coming from the IUL, from the policy. But what I want to emphasize, though, is the importance of having tax-free income and also maximizing that tax-free income potential. because there could be so many ways that going forward, Congress can change the layout and the way that everyone pays tax in this country. You know, one of those is, I don't know if you're familiar with this, you may be, but the way that people pay for Medicare. So there is a Medicare program, and it's not a great program, by the way, but there's a Medicare surcharge known as IRMA, income related monthly adjustment amount. IRMA, income related monthly adjustment amount. And it's essentially an additional surcharge for Part B and Part D of Medicare, mostly Part B. It's a surcharge that is based on how much taxable income you have. And what happens is when someone signs up for Medicare and Social Security, the Medicare premium they pay to get care, it increases by their taxable income threshold. So if you have a person who's retiring with an overloaded amount of qualified assets or taxable income, they're going to be paying a lot more for Medicare over their 20, 25 years to life expectancy than someone else who has mostly tax-free income or tax-free sources. And the cost of it is it is overwhelming. The other thing about the IRMA is that the Medicare premium comes out directly from Social Security. Well, it turns out that Medicare premiums or Medicare costs are growing faster than the inflation for Social Security. So eventually what could happen is the Medicare costs could wipe out somebody's entire Social Security check over time. So a way to avoid this problem for people going forward is to add more tax-free sources of income. And so we can do that with our IULs, just like other companies can, but the way we can provide it is different. So we have the normal loan types. We have participating variable loans, for example, where the client can borrow against their policy and still participates in the index crediting on their cash value that they're borrowing against. We do also have a participating fixed loan, which has a guaranteed loan rate of 5%. So if someone buys a policy today, they have the option of having a guaranteed loan rate in the future when they borrow the money. They can choose the participating fixed loan and guarantee that 5% loan rate. But my favorite way of taking income from this IUL is this feature known here, the lifetime income benefit rider. This is a very impressive way to present income on a life insurance product to a prospective client. It is a feature that can guarantee income on a tax-free basis, and it can guarantee that income for the rest of the person's life. So the way it works is the client purchases the IUL, whether it's available both on Peak Life and Flex Life. They contribute premiums to it over time, and as early as age 60, they can turn on this rider, and the company at that time will guarantee them an income payment for as long as they live. And that income payment would be tax-free while it's being paid out. And the policy once the riders turn on, it's never going to lapse. So there is lapse protection. So essentially, this rider turns the policy into a guaranteed policy with income. It's reverse. It's like reverse of whole life or reverse of GUL. Instead of guaranteeing the death benefit, we can guarantee income to that person. And the illustrations that we're running, they look very impressive. We're showing, you can see a withdrawal rate from the cash value between 6 to 7%. And Neil, what's the safe withdrawal rate these days? What do experts say that the safe withdrawal rate is on assets that someone builds up?
I'd say 5%.
So people actually are saying it's closer to 2%, between 2 to 3%, making sure that a safe withdrawal rate. I mean, 5%, 5%, you could end up doing that with with a good investment portfolio, but this really safe conservative withdrawal rate is closer to between 2 to 3% is what they recommend. Well, we're showing between 6 to 7% withdrawal percentage of their cash value in this policy. And again, once they turn it on, it's guaranteed by the company. So it's not relying on market performance after the income it starts. It's not relying on index performance. It's giving the client peace of mind. It's protecting them against living too long. It's twofold. The rider protects against living too long, but it also protects against tax risk. And I mentioned earlier the tax risks of Medicare, the tax risk of rates going up, brackets changing, right? So this helps to protect against that in the future. Again, it's available as early as you can turn it on when you turn 60 or later, and it would be available after 10 years of owning the policy. Any questions on the IUL products or the LIBOR before I go on to the other products?
No, it's all good.
No questions? So the next product I'm going to go over is our whole life. It's Total Secure. It's called Total Secure. And the main differences or differentiators between Total Secure and other whole life solutions that you see out in the marketplace is, number one, our guaranteed performance, our guaranteed cash value is one of the strongest, has some of the strongest guarantees compared to other whole life vehicles. So if guarantees are very important in your situation, whether it's a business owner who wants to be really conservative and wants to focus on those guarantees, or just a very conservative individual, we definitely do have a fit there. But also the way the product is priced is also really competitive. When you compare our product, our whole life product, to others, our premiums for the same death benefit are much lower. So for example, let's say that Guardian, for $1 million, let's say that Guardian is charging $30,000 per year for a specific individual. 30,000 annual premium for $1 million of coverage. Well, the premium on Total Secure would come in at 22,000. So for the same death benefit, National Life is charging $8,000 less. So if we wanted to, we can match the premium to the other company, and we can pay the same premium and give the client more death benefit. Or we can load in some paid up additions and grow the cash value more effectively, right? So there's definitely an advantage there, a competitive advantage there, is with that lower premium solve that we tend to have. We could use the savings and invest it. We can use the savings to buy other insurance, or we can simply just increase the premium on our product and provide more benefit to the client. So that's one advantage of whole life. So it's really strong guarantees, really good pricing in terms of the premiums, and the living benefits that we talked about earlier. Those living benefits are also on this whole life product. The other differentiating feature on Total Secure is flexibility. So we know that whole life traditionally doesn't have too much flexibility. It's a very fixed type product. The premium is fixed. It's not very flexible to add in extra premium. unless you do have the paid up additions rider. But even if a whole life does have the paid up additions rider, you can't simply just increase the premium and add more to it unless underwriting is completed. So we know that that's not too flexible. Total Secure is completely different. So we do have a paid up additions rider that can be added. But the other way that people can pay money is with this function known as excess premium. Excess premium is a 100% flexible form of premium payment that can be paid or skipped at any time. So excess premium, the main purpose of excess is to pay down the policy faster. It's not adding to death benefit like PUAs, but what excess premium does is it grows the cash value faster and it pays down the policy quicker. So if a client was started with a whole life paying the minimum premium, let's say, so clients paying the minimum premium and paying that to age 100. If all of a sudden 5 years later they have extra money they want to put in, they can increase their premium, no underwriting needed, and they can pay that policy off by retirement age, or they can pay that off by the 20th year. It's very simple. They just change their premium payment, and there's no application, there's no underwriting needed for that. Excess premium can be paid as clients can pay as much as they want and as little as they want. And if they decide to stop the excess premium or suspend it for a little while, that's perfectly fine too.
Steve, does that excess premium, is it credited in an interest bucket, or is it paid towards the insurance?
So so when the excess premium is paid, it is earning interest in what we call an excess premium balance.
Okay.
And so that excess premium balance is right now is earning 4.25%. The guarantee on that is 4%. Okay. And then on the anniversary, that excess premium is then applied to the policy. And there's a premium load on it of 7% when it's applied to the policy. And what it does specifically is it pays down the insurance. So it pays up a piece of the underlying insurance when it's applied, and that could reduce the number of years that the client needs to pay.
Right. So if somebody has, for argument's sake, they have a child going to college in 4 years, and they have a lot of money sitting on the sideline, can they put that excess premium into the policy? Therefore, when their quadro forms not, have to show what's in the life insurance policy, and put a lot of money away in a protected life insurance policy by doing that.
Yes, definitely. I mean, we would of course take a look or be cautious of the MEC, or be conscious of the MEC limit, of course, on the product, and decide if it makes sense, if we want to avoid MEC, or if it's okay to create a MEC. But yes, if they want to keep it non-MEC, they can dump the excess premium up to the MEC limit, and they can pay that in as many years as they want before the college education starts, for those years start. And then after when the child starts to go into college, they can just stop paying that excess premium and just pay the minimum. That is certainly a way they can use it. Yes.
Excellent.
So the other reason why excess premium, or why the Total Secure is different, is because we have this excess premium flexibility. We can change the premium structure or the policy structure on the fly as the policy is going on. So what I mean by that is, let's say you want to present a 10 pay, okay, to a prospective client. showing the policy paid off guaranteed in 10 years. So you can do that with the total secure, show the 10 pay. And then let's say 5 years in, the client can't make that premium payment in full. Let's say college happens, right, Neil? Let's say that in a few years now, the child wanted to go to University of Vermont instead of Rutgers or Montclair. Exhibit A, that was me. I wanted to go to University of Vermont. So, but I could, but we could have paid much less to go to a state school. I'm originally from New Jersey. And so let's say that the policyholder had trouble paying that 10 pay premium 5 years into the policy. Well, they don't have to take a loan to cover that full premium. They don't have to surrender dividend additions. All they have to do is just pay the minimum premium on the contract. Right. Because the minimum premium is going to be less than that 10 pay premium. So we allow them the flexibility of just paying the minimum. And then they can pay the minimum as long as they need to.
Great.
And a few years later, they want to increase their premium back up, they can do that as well. So you can start with a 10 pay structure and then change it to a 20 pay or change it to a full pay mid-year or midway into the policy. So a lot of flexibility there.
Excellent. And I wanted to say, because we have to wrap it up pretty quickly. One of the things about their whole life and their UL is if you're doing pension planning and distribution planning, that you're flexible in moving from whole life back into a UL at retirement, that type of thing, correct?
So you mean for like a qualified plan exchange?
Yes.
Yes. If you have
That's very big. Yeah,
yes,
I just want to feature the uniqueness of your product, and very quickly he's going to go over the accelerated underwriting program that you have.
Yes.
Okay, I just want to move it along a little bit.
No, of course.
Okay.
So yeah, just really quick before I do the streamlined underwriting, the term products. So as Neil said, we have 10, 15, 20, and 30-year. Very strong conversion privileges. So the term can be converted to any permanent product that we have available. The living benefits we talked about earlier on the term, so that makes it really competitive. And the conversion period is also really generous. So these are the conversion periods here. If you have questions on them, give me a call. I'll keep moving here. But for example, on a 30-year term, they have 20 years to convert, or on a 20-year term, they have 15 years to convert. So a really good amount of conversion period. Again, convertible to any permanent product we have. Neil just mentioned the streamlined underwriting program. So we do on our term product, we can do streamlined underwriting, meaning that we don't require a medical exam or fluid testing. We just use clinical data to perform the underwriting. As long as everything looks okay on the application, for example, no serious medical conditions. And we can use streamlined underwriting from ages 18 to 50 up to $2 million on term. From 51 to 60, we can go up to 1 million. And from 61 to 65, we can go up to 250,000. So this is term. On the permanent side, the only difference is from 18 to 50, we can go up to $3 million with streamlined underwriting from 18 to 50 on permanent. So 2 million, 18 to 50, and then 1 million, up to 1 million from 51 to 60, and up to 250,000 from 61 to 65.
Terrific. We have any questions at this time? I did want to get on to the next presenter, but as you can see, what a terrific company. I definitely have to focus in on their term and the fact that it's convertible to age 70. This is a differentiating factor. People talk about price. It's not about price. It's about longevity. It's about helping our clients and adding the living benefits as well. What a home run. You're really taking care of your client, and that differentiates you from going online and buying a policy. And that's what this is all about. And thank you, Steve. Terrific presentation. Thank you, Rich. I don't know where you are, but I think you're there.
Yeah, thanks,
I
Neil.
appreciate it.
Neil, thank you. And again, any questions, again, here's my contact info. Please reach out. Love to help you out with sales opportunities. Neil and team, thank you so much for this opportunity. I really appreciate it.
Thank you.